It turned out to be a pretty exciting week for the S&P 500. The bears, they controlled the week for sure for the first part, and then later the bulls came back in, they found some support, and they raised it higher. So what I'm going to show you this week, I'm going to get a little bit more granular on the S&P 500 on a daily chart. And then also I want to show you one of the favorite things that we look at for divergences and kind of as a leading indicator of what may happen next in the market. All right, so first, let's look at the S&P 500, a daily chart. I want to show you two things on here, and then we'll jump right into the next one. All right, here's a daily chart of the S&P 500. So there's really two things that I want to show here, and it's a little bit more bearish, I would say, than bullish, even though we did bounce off of support here, and I want to show you why. Okay, so number one of the things that we look for is on these oscillators is that when they do start to turn directions, that they do it in quick order. So I want to just go back, and I know this is really getting deep in the weeds and the minutia here, but look back here, back in June, and we can see that the S&P 500 down, 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 down. We see a jump in price. And then look how the oscillator followed. Look how it broke that 50 level and got even a little bit higher. I tried to get it with this green line. I might not be exact with the green line, but pretty darn close where the indicator closed out. So now the day's not over. This is doing this on Friday morning. So the day's not closed. Of course, this I guess it could bounce a little bit higher, but as of right now, it just hasn't done it. So what I want to show is that the strength of this rally is certainly not as strong as the strength of this rally. All right, so that's good for the bears. The second thing is that look at all these times it has hit support. So it bounced, bounced, bounced. Now the thing about support, and the same thing for resistance, which this is resistance up here, is the more times that it hits it, the less likely it is to hold. And so what will happen is if the bears can get the back here into the support area and they can't come in and then buy it up quickly, there's a good chance that we'll break to the downside. So support and resistance is kind of like building a castle or a dam in front of ocean waves that come in, and then slowly they erode that barrier, that sand barrier. And that's exactly the way that support and resistance works. The more that the price hits it, the more that it erodes it. So we'll see. We don't have a big strong bounce here as far as the oscillator goes, but it does look good for the bulls that they did get it. At least this is an official buy trigger, and so we'll see if it holds. But we could simply just be filling this gap right here for a move to the downside. We shall see. All right, so we just got done looking at a daily chart of the S&P 500. So let's back it up a little bit. That was pretty granular. So let's back it up. Let's look at a weekly chart, a longer term chart of the S&P 500, and then also the relationship between consumer discretionary, the consumer discretionary sector, and the consumer staples sector. So we're just measuring the difference between the two, which one is outpacing the other. And when discretionary is going up over consumer staples, that's good. That is a bearish sign for the market. And when it's going down, then that is, it is a bullish sign for the market when discretionary is outpacing staples, and it is bearish when staples are outpacing discretionary. So I want to show here where we are now, and then also what happened back here. So pretty interesting. Right before the market took the larger relative tumble, we saw discretionary fell through, and it had already been trending down a little bit, but it did fall through. And so right here, look where we are. We're declining, we're declining, we're declining. Now we didn't break through this, what I would call a major low right here, but this is one thing that we're looking for, which could be a leading indicator of where the S&P 500 is headed. So I don't know if it will break, and even if it does break to the downside, whether or not the S&P 500 will follow, but it's definitely something to watch, which is the consumer discretionary sector versus the consumer staples sector. Which one is outpacing which? So if it does break to the downside, be a larger warning of what could be to come in the S&P 500. So it looks like the S&P 500 is going to close down for the week, and like I said earlier, the market hasn't closed on Friday yet, so unless we see some more really extremely bullish behavior or a larger shot to the upside right now, then the S&P 500 will close down for the week. So it did when it came down to support, bounced on support. Like I said about the oscillator, we'll see if it can close a little bit higher and give a little bit more confidence to the bulls, and if we'll have some follow through on this trigger, the buy trigger on the daily time frame of the S&P 500. So on the longer term, we had to close out of the month, and so that's pretty interesting. We get to look at all the longer term oscillators, see how they close, and they close positive for the month. So that's a good thing for the bulls as far as momentum. We're basically just going sideways right here, and that is going back and forth, back and forth, back and forth. But it did close positive on both the S&P 500 and then also the All World ex-USA Index. We haven't had a buy signal in there for a long, many months, and we finally got one there. So that is good for the bulls. Now we'll see if it can hold on to it. If it's just simply showing that, okay, look, it's at the top of the trading range, and we're due for another downside correction. But that's that for the longer term and the oscillator, and then for the longer term momentum, the monthly momentum. And then also growth stocks they're outpacing value again, and then large caps are just much stronger than small caps. So we'll see if that relationship holds. All right, this week we're going to look to see if we can continue on the daily leg up, or if Monday that all gets wiped out, or next week that all gets wiped out, and we start to retest that low again. And if we do retest the low again, frankly, I doubt that it will hold. Don't know, doesn't really matter. But if we do go back to the downside, it'll be interesting to see if it holds. So, all right, hey, look, if you like, subscribe, like the video, have a great week, and we'll talk to you next time.